Is having lesser than 10,000 bad? Not really. Because it's a seed eh. We all have different starting points. Not everyone has 100,000, not everyone has 10,000. Some have 1 million, some have 10 million. You don't shy away from investing just because your ideal amount is not there. Hey guys, so I was doing a live chat. I'm sure you've noticed this. Every time I upload a YouTube video, we're doing a live chat where I get to interact with you. And if you're watching, try to stay tuned. We do videos every 8 p.m. and I get to interact with all of you. But part of that live chat was a question from one of our commenters, and he made a very, very good question asking about dividends. This came from KHYMX. I don't know how you'll pronounce that, but that's his name in YouTube. His question is this: mostly ba ang recommended sa mga earnings sa dividend is may stock value ka na 100,000 and up para ramdam yung dividend? So basically, the question is this: should you put in 100,000 so that you'll actually feel the dividends that you're actually getting? In this video, that's what I want to address to all of you. I want to give you 4 strategies on how you can maximize your dividends. And number 1 is basically this: if you've been watching my other videos on dividends, and if you have not seen it yet, just search marvingermo dividends. A lot of videos will come out. I believe they'll be very, very helpful for you. I would mention this very, very specific. You invest in stocks that give dividends if you are at a point in your life, in your career, in your financial planning landscape, you want to preserve what you have, or you want to get cash flow. And when you preserve what you have, or you want to get cash flow, that already means that your portfolio has already experienced a level of growth. Meaning, it already has gone bigger. That your goal is, since it's already bigger, you just want to maintain it, but not just maintain it, you want to get passive income from the amount of money that you have already created growth with. Look at your portfolio. If you think that I'm okay with the growth that I have already in my stock market portfolio, then by all means, siphon off some of them and buy dividend stocks, because you've already grown your portfolio and you just want to preserve it and get cash flow. However, if you're at the point in your investing career also that you think you still need it to grow and you don't need the cash flow yet, then your narrative, dividends are amazing, but you want to focus on companies that are rapidly growing, that have a greater chance to expand further. And companies like that either don't give any dividends, or if they give out dividends, it's not so significant, and it's not really something that you would consider as a stock that you would buy primarily for the dividends. Number 2, I'll just springboard from the question that 100,000 pesos, is it okay? The more you put in, the better. Why? There's a big difference between putting in 100 million earning 6% versus 10 million earning 6% versus 1 million earning 6% versus 100,000 earning 6% via dividends. The more you put in, the bigger it will be for you. So how do you get to maximize it? Is that when the markets drop and you have an extra amount of cash, and then when you start to compute it, if I buy it at this price, it will give me 5%, 6%, 7%, and you get to define what amount of percentage is okay already for you from a dividend perspective. When it drops, lump sum, you get to start to buy, and it doesn't matter if it goes lower as long as you already hit the amount of dividends or the amount of return from a dividend perspective that you actually want to get. To answer that question, number 2, 100,000 is good, but the more you put in, the better. 100, 500, 1 million, 5 million, 10 million, 50 million, 100 million. The larger you put, the better. And one way to make that strategy very, very effective is when the market drops, it's at a point where the dividend yield of that particular stock that you want to buy is already amazing. Then that's when you start putting a lot, because you get to receive a return that you actually want based on the acquisition cost of you at that particular price. Number 3 is this: what if you don't have 100,000 pesos yet, but you're young and your runway is very, very long? You're in your 20s or you're in your 30s, and you say you want to be in the stock market till 60, till 70, till 80, and maybe your profile is you like dividends because it's easier to analyze, because you know that companies that give out dividends are already earning, and it's simpler to analyze because it places a smaller amount of risk versus companies that don't give out any dividends. If that's your profile, then it's okay. If the amount of money that you want to put in is not yet 100,000 pesos, you have 10,000, buy. It's okay. Why? Because for sure, since you're in it for dividends, your goal is to have more shares. Your goal is to get more dividends based on the amount of money also that you would put in. It doesn't matter if it's small in July or August 2022. In my opinion, what matters is if you build a base, life-changing volume in a year, in 2 years, in 5 years, in 10 years, you would position yourself to be at a point where you have a larger amount of stocks, of shares, that will give you dividends. Is having lesser than 10,000 bad? Not really. Because it's a seed eh. We all have different starting points. Not everyone has 100,000, not everyone has 10,000. Some have 1 million, some have 10 million. You don't shy away from investing just because your ideal amount is not there. You always start with what you have. You always become faithful with what you have. And as you become faithful with what you have, you not only gain the earnings from that, but you gain the skill and the experience. And the next time you get promoted, the next time you get a bonus, the next time you start to earn more, you already know where to put it eh. Because you have a goal in mind. If there's just one thing that you're thinking of that you want to stack and put as much as you can so that the dividends that you will get will be better. Number 4 is this. It's very, very important also for you to look at the stock that you're buying that's giving out dividends. You want that stock to not only give out dividends on a regular basis, meaning if they give out once a year, consistent for the past few years, they have been giving out at least once. If they're giving out twice a year, consistent for the past few years, they've been giving out twice. If they're giving out quarterly, similar to some REITs, similar to Globe, for the past few years, they have been consistently giving out. That's well and good, and I'm a big fan of that. I'm a follower of that. But if you find something that what they're giving out is also increasing in value, that's even better because that will help you maximize your dividends even more. If you buy something in 2022 and they keep increasing the dividends that they're giving out every year, even if your dividend yield today may not be as attractive, even though your dividend yield today may not be as good, but over a 5-year period, over a 7-year period, over a 10-year period, probably the dividend yield that you will be getting from what you purchased today will be higher. Look at what Warren Buffett is doing. When he bought Coca-Cola decades ago, the dividends that he's getting today is massively, massively, massively bigger as compared to those who are buying Coca-Cola right now because he bought it, held onto it, and he just kept on bankrolling the dividends. Those are 4 tips on how you can maximize the dividends. And I want to do this. This is something that's very, very new. If just a review, if you stayed up until then, put it down below. What was the 4 tips and strategies for you to be able to maximize the dividends? And what appealed to you the most? What was the one thing, one idea that after watching all of this, I think that works for me and I actually want to try it? I want to hear your thoughts. Put them down below. And again, if you want to watch more about the dividend investing series that I have, so we have a playlist that you can check out. It's all dividends. Or if you don't want to check the playlist, just search marvingermo dividends. You'll see everything right there. If you want to learn more about the stock market, I've written 5 books about investing. I have a webinar that's recorded. You can watch at your own convenience. Everything is down below. And if you stayed up until then and you find value from the videos that I've been creating, appreciate it if you could do a couple of things. Number 1, like the video. Put a comment down below because it helps the YouTube algorithm push this. Number 2, if you have friends or family that you think this will benefit them, share it to them. Send it via Messenger. Send it to your group. It's nice to give money to relatives, but if you have the ability to educate them, in my opinion, that will speak volumes. That will do far more than you just giving money to them. Because every time you give money to them, the potential stops there. But every time you teach them, every time you educate them, it suddenly creates a framework that they get to earn on their own. And I do hope videos like this help them. If you want to be updated with what I do, the videos that I have right here, a couple of things. Press the subscribe button, but don't just end there. Hit the bell, because the bell allows you guys to be notified every time I come up with new videos like this. I hope that this video about dividend investing was something that was very insightful for all of you, because I have been a fan of dividends for a very, very long time, and it's something that will allow you to get passive income regardless if the market is bullish or bearish, and it allows you to just receive it over and over and over and over again. That's it for now. Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.